So does your retirement count as income? I imagine you're asking about retirement income. Does it count as income for you? More importantly, do you get taxed on that income, or how do you get taxed? How does that all work? That's what I want to kind of break down for you in this video right now. All right, so let's talk about retirement income. Like, what does it really show up as? Is it income? Is it actually ordinary income? Is it capital gains, all this kind of stuff? Well, it depends on what you're investing in. Now, if you have traditional retirement accounts, like 401ks, IRAs, and so on, then yes, it does count as ordinary income. So that means you get taxed at really the highest tax rate you could possibly get taxed at, which is ordinary income tax. I mean, just remember, when you got that tax deferral in the beginning and everybody told you it was a smart idea to put your taxes, like push it away into the future, and then you think about it right now, you're like, you know, there's this Trump tax plan that's going on right now, even from before, from 2016 or whatever it was. That Trump tax plan is still in effect, and it's one of the lowest tax plans we've had in the 110-year history of the federal tax. I wonder if it's going to go up in the future, if this is one of the lowest we've ever seen in history. Listen, I don't have a crystal ball, I don't know. But I do know odds a little bit, right? And if I were betting and gambling on this, I would probably guess that income taxes are going to go up in the future, which means why would I take the tax break now only to pay higher taxes in the future? Wouldn't I rather just get taxed now and then be tax-free in the future? So that's an option. So retirement income does depend on that. What kind of retirement plan are you using? If you're using 401ks and IRAs and even IRA annuities, anything that's basically any kind of tax code like that, yes, you will be taxed at ordinary income tax, whatever it is at that point. And just understand too that whatever you pull out of those retirement accounts, even if you don't need it as income, if you pull it out, you get taxed and that counts as income. That also means that if you're working a job or a business, you're making money here and you pull out money out of a retirement account, it stacks on top of your income, which could push you into a higher tax bracket at that point too. So just be aware that yes, it does count as income, even if it doesn't feel like income because you just feel like you're withdrawing from an account. But it does count as actual income because you did not get taxed in the beginning. Now, what if you got taxed in the beginning and didn't later on, like a Roth IRA? Well, a Roth IRA, you use after-tax dollars to go into it. It grows tax-free, comes out tax-free. That does not count as income towards you. That's tax-free income for you, right? Tax-free withdrawals, if you call it that way. So in that situation with a Roth IRA, no, you will not be taxed. You're safe. Now, is it possible Congress can change their mind and make different exceptions? Yes, they can change the rules at any time, just like the IRS likes to change rules whenever they want. That can happen. But just be aware that for right now, at least, the Roth IRA is one that gives you that tax-free benefit later. But like I said, if Congress changes the rules, you'll be susceptible to whatever those rules are. Personally, I think the Roth IRA between all these traditional retirement plans is a better option. It does give you a little bit more freedom. The only thing I don't like is that unless you're trying to do like different kinds of Roth IRAs, you have to kind of do like what's called a backdoor Roth. You have to jump through a bunch of hoops to turn your money into a Roth IRA, you know, from traditional to Roth. That's another video right there. Even if you're trying to do something like that, if you're just trying to do the traditional Roth IRA, one, most of you can't put in more than about $7,000 or $8,000 a year anyways. And then two, guess what? You're only, if you make too much money, if you make about a couple $100,000 a year, they won't even let you contribute to a Roth IRA. So just be aware that sometimes they really only use the Roth IRA for those that are like middle class or lower class. That's really it. But what are the upper class people doing? If they can't qualify for a Roth, what are they doing with their money? Now, like I said, there are some exceptions. Some people can do backdoor Roth IRAs. But a lot of what these people will do, especially because they know that the rules can't change on them because it's a contract, is they'll do something that's like a whole life insurance policy. Now, you might see other videos. If you haven't subscribed to this channel, do so now. There's a lot of other videos about infinite banking that you can see here, or max ROI infinite banking, where you can actually get your money to pay you in two places at the same time using this very tool, this whole life insurance policy. The most boring life insurance you could possibly get besides term insurance. But the nice thing is because it's stable, because they're returning it right now about 6% tax-free currently, right now it's an amazing place to store your cash because interest rates are higher now. Another thing too is that this is just like a Roth IRA, but you don't have all those limits. You don't have all the limitations where, you have, you can only put in so much and you can only, put in if you make so much money. It doesn't matter how much money you make, you can put in a lot of money. By the way, you can put in up to 25% of your stated gross annual income. So even if you have a tax return that's much lower because you're a business owner and you write off everything, just so you know, you can put all that back in and say, well, no, actually, I really do make X amount of dollars per year. You can put in a quarter of that per year into this kind of plan, which gives you a lot more option to be able to have more money that's tax-free Oh, and by the way, especially those of you that are starting to build up assets or you want to build assets and become wealthy, the money in here in most states is 100% protected from lawsuits and creditors, which we don't get that protection in necessarily in those other retirement plans that we have. 401ks, yes. IRAs, Roth IRAs, not so much. Savings accounts, definitely not. So this is one of the few places, like a tax-free savings account, that's a high-yield savings account, but it also has liability protection, meaning that if somebody sues you, you can have millions of dollars in here and they can't get that money. By the way, if you have kids that are going to become eventually college-age kids or are college-age kids, any of the money that's in those life insurance plans are not counted as an asset against you or against your child if they're trying to get scholarships. So it's actually another cool place to store money. Keep it all there so that you look more broke, so then you can get better scholarships from those colleges or universities you're trying to get your kid into that are so freaking overpriced and expensive. So a lot of cool things you can do with that. Now, when you pull out money from life insurance, how does it work? Well, it grows tax-free, comes out tax-free. So it actually does not count as income. That's the one beautiful thing. One, I never have to file a tax form ever, unless you break it. If you do some certain things, if you break some certain guidelines, that happens. But usually with the way we set them up, people won't do that. But again, I never have to worry about taxes. Not while it's growing. I don't have to worry about that. Even if I access the money, which is very easy to access, I can get to it in about a week anyways. None of that, I don't worry about getting taxed. I can actually use this as a tax-free retirement income. And even better, guys, I don't have to wait till I'm 59 and a half like I have to with Roth IRAs, 401ks, even IRAs and things like that. Annuities, especially if they're qualified annuities, I don't have to wait till I'm 59 and a half to access them. I could use them in my 20s. I can use them in my teens. Well, okay, you're not going to use it in your teens because you have to be at least 18 years old to be able to own one on yourself. But that being said, you could be as young as you want. You can access the cash and you can start pulling it out as tax-free retirement income. I have one client in particular that he actually wants to go and buy 1 or 2 properties every single year. That's what he's using to build up his cash flow. He had it on a very specific plan. And then he showed it to me. He's like, here, Chris, by 2029, when I'm in my early 30s, I'll be able to retire. And I saw his goal was $5,000 a month, but his rentals were projecting to be about $4,400 a month. And I said, well, you're not quite there. He's like, oh no, it's fine, Chris, because remember, I've been also saving inside this life insurance plan, about $15,000 a year. I'll be able to pull off in just 8 years or so, I'll be able to pull off about $900 a month off of that. And I was like, oh yeah, that's right. So you actually will hit your goal by the time you're early 30s. He's like, yep, you got it. Some people use a mix. Some people use traditional retirement plans. Maybe they'll use 401ks, IRAs, or Roth IRAs. Especially if they use Roth IRAs, they want tax-free always. They might use the Roth IRA for when you're in your 60s, but in the meantime, to close that gap for early retirement, they'll use their life insurance in the meantime. Now, personally, I think that's a good option, but it's not the best option. My favorite option is how do I create passive income with that money right now? How do I get to the point where I'm work optional, where I work because I want to, not because I have to? That's where I don't need those traditional retirement plans. Now, retirement income, I can create passive income, which by the way gets taxed differently than traditional income. Now, there are different passive investments. Some will charge you typical ordinary income tax, while others will give you benefits. For example, I have rental properties right now that I do get a positive profit and cash flow from. I get monthly income coming in from it, but because I can depreciate the property, because the structure of the property, as you guys probably know if you own a home, the structure of the property kind of breaks down over time, doesn't it? So the IRS, the government, allows you to write off a certain percentage of the value of your home against your income. So the cool thing is I pay little to no taxes on that retirement income. By the way, if you qualify as a real estate professional, which is a whole few guidelines on that, you qualify as a real estate professional, you can even show a loss on your taxes. You could actually get a tax return potentially while still showing income coming in. I had one friend that was making $1 million a year as a real estate investor, but because he could write off so many things, he was only showing about $25,000 a year of income on his tax returns. So in that situation, he could actually get a tax return even though he makes $1 million a year. Now, some people might call that robbery. I call that genius, right? Because if it's legal, if the IRS has all those loopholes, why not use it for yourself? So there's a lot of cool ways you can use passive investing to actually work in your favor. And again, not have to worry about 59.5 rules, whatever. This is money you can actually get paid today, depending on the kind of investments you do. So here's what I suggest. I got a whole channel of stuff talking about passive income, which hopefully you've already subscribed to Money Ripple's channel. You better right now if you haven't. But I also recommend this. Go to moneyripples.com, especially this infinite banking strategy, using this life insurance as tax-free returns and even ways to make money in 2 places at once by using this to invest in passive investments. Go to the infinite banking section to go deeper down that rabbit hole and learn more about what that is today.